Good morning. I would like to call to order the TWIA meeting for today, May 12, 2020. The time is now 9:03 a.m. We are handling this via teleconference and web conference today due to the COVID-19 pandemic, and please bear with us as we do as we do this. First of all, I'd like to have Mr. Perkins remind us about the antitrust statement and conflict of interest disclosures.
Thank you, Madam Chair. Good morning to everyone. I want to remind everyone that this is a regularly scheduled quarterly meeting of the TWI Board of Directors, and so our antitrust statement applies to us as we meet here today. Furthermore, there's an additional disclaimer and disclosure that needs to be made with respect to some recent legislative requirements. Chapter 2210 of the Texas Insurance Code requires TWI board members and certain committee members to make public conflict of interest disclosures with respect to matters before any discussion or vote thereon. Such potential conflicts of interest include a financial or personal interest in an entity that may benefit financially from the outcome of the discussion or vote, and holding an insurance policy issued by the association that may be affected by the discussion or vote. Today's meeting is a meeting of the TWI Board of Directors, whose members are Karen Gard, Michael Garrick, Carice Morrison, Georgia Neblett, Tony Schrader, Peggy Gonzalez, Tim Garrett, and Chandra Franklin Womack. Today's meeting agenda includes the following topics that TWI staff has determined may have the potential to trigger required disclosures: deliberation, possible action regarding funding for the coming year, a request for proposals for actuarial services, and procedures related to receipt of premiums by the association. In connection with the discussion voting on the foregoing, the following disclosures are hereby made by the board members named below. Karen Gard is employed by a TWIA member insurer. Georgia Neblett and Chandra Franklin Womack are TWI policyholders. Michael Garrick and Carice Morrison are employed by TWI member insurers that are affiliated with agencies that are paid commissions by TWIA. Peggy Gonzalez is a licensed insurance agent who is paid commissions by TWIA. If any board member is aware of any other disclosure that needs to be made at this meeting, please speak up. Are there any questions from the board members? Thank you, Madam Chair. That concludes the notice portion. Have a good meeting.
We want to thank everyone who is joining us for the quarterly meeting of the Texas Windstorm Insurance Association Board of Directors. My name is Christina Donley, and I will be the technology moderator today because this meeting is being held virtually. I will also help to facilitate public comment during the designated period on the board meeting agenda. We're holding this meeting through GoToWebinar and live streaming on YouTube. We will only be able to accept public comment from participants logged in through GoToWebinar. You can find links to register for the GoToWebinar meeting or listen to the YouTube live stream at TWIA.org. Before we move forward in the agenda, I would like to provide participants of the meeting with a few reminders to help things run smoothly today. If you are a TWIA board or staff member participating in today's meeting, please mute your microphone when you are not speaking. Unmute it when you would like to speak. Keeping your microphone muted during the meeting helps to minimize disruptive feedback and background noise. GoToWebinar will give you a pop-up reminder if you attempt to speak while muted. You should also turn off all other technology on your computer, as other open programs and devices may interfere with the functioning of the technology during the meeting. We also ask that you state your name when you speak so other participants and attendees of the meeting know who is talking. At this time, only members of the TWIA board and association staff presenting to the board have their microphones unmuted. If you are a registered attendee of the meeting, you will remain muted for now. Please notice the handout section on your GoToWebinar control panel. This section contains the document we will review during this meeting. It will be displayed during the webinar as well. We will be opening the meeting for a period of public comment in a few moments, during which time I will go over the process of how to make a public comment during the meeting. If at any time during the meeting you're experiencing technical difficulties, you can let staff know by typing in the questions box, and we will attempt to assist you. A visual is on the screen which shows where to find the questions box. Please note that TWIA board members and staff will not be able to respond during the meeting to comments or questions entered in the questions box. I will now turn the meeting back over to the TWIA board chair. Chandra, it may appear that you're self-muted, so you want to check your mute status to make sure we can hear you.
Thank you, Christina.
Of course.
So I'd like to introduce the new board members. We would love to have done this in person, but the circumstances dictate we'll have to do this virtually. So I'd first like to welcome Peggy Gonzalez. She is going to fill the role of Coastal Representative and Designated Agency Representative. She's the Vice President of Houston Insurance Agency in Brownsville. And I'd also like to welcome Tim Garrett, who is going to fill the role of Consumer Representative. And Mr. Garrett has 30 years of experience in the Lubbock real estate market and is a broker owner of the local Next Home Core Realty franchise. So we'd like to welcome both of them to our meeting today.
Thank you.
One of the things we haven't done is we didn't take any kind of attendance, or do we have a quorum?
Ms. Franklin Womack, we do have a quorum. We're able to see the attendees on the screen, and we've determined that we do have a quorum of the TWI board present, so we are validly meeting. Thank you.
Perfect. Thank you. So the first item up on the agenda is to approve the minutes from the prior board of directors meetings.
Madam Chair, if there are no changes or additions to the minutes, I move that they are approved as submitted.
Thank you, Ms. Neblett. Do we have a second?
I'll second that. This is Karen Gard.
Is there any comments? All those in favor of accepting the minutes as presented, please say aye.
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 Any opposition? Minutes are approved. Moving on to public comment. I'll turn this back over to Christina.
Thank you very much. Thank you again to those of you who have joined today's meeting. If you have registered to attend the meeting through GoToWebinar and would like to make a public comment, please click on the raised hand icon to the left side of the GoToWebinar control panel. The raised hand icon, circled at the bottom of the image on the slide, shows how to find and select this button. If you have clicked on the raised hand icon, we will call your name and then unmute your audio so that you may give your public comment. You will see your microphone icon, circled at the top of the image on the slide, change from red to green to indicate your microphone is unmuted. The board chair has requested that public comment be limited to 3 minutes per person to allow time for everyone who wants to participate. As a reminder, if you're experiencing technical difficulties with making public comment, you can let staff know by typing in the questions box. However, TWIA board members and staff will not be able to respond to comments and questions entered in the questions box during the meeting. We're ready to begin public comment. So as a reminder, you're going to locate this hand raise icon on your GoToWebinar panel, and that would let me know that you would like to make a public comment, and I will unmute your microphone. Give me just a moment to review the hand raises. While we're waiting for hand raises, we are receiving a request to identify the board members that are present. Mr. Perkins, I know that we said we do have a quorum, but could I lean on you to take a moment and list off those board members that are present for attendees?
Yes, absolutely, Ms. Donnelly. Thank you. I would be happy to do that. Our chair, Chandra Franklin Womack, is with us today, as is Tony Schrader, Karen Gard, Mr. Garrick with Farm Bureau, Ms. Neblett, Ms. Gonzalez, Mr. Garrett. In looking at my list, the only one I have not accounted for of our 8 board members is Carice Morrison. So if Ms. Morrison is on the line, she might just speak up, and I apologize for not having seen your name on the list, Carice.
I was in communication with Carice a couple minutes ago, and she said she was going to get out of the method she was in the meeting and was going to dial back in.
So thank you very much. Christina, I hope that will be satisfactory for the purposes of the inquiry that you had. Thank you. I'll turn it back over to you.
I believe so. Thank you very much. Let me take a moment here to review and see if we have any hand raises at the moment. So as a reminder, if you're wanting to make public comment, you're going to locate that hand raise button that's circled on the bottom of your screen right now that's being presented. You're going to find that on the GoToWebinar control panel. So you simply click that and that will notify me that you would like to make public comment. And I will unmute your microphone so you can make your comment. At the moment, I do not show any hand raises from attendees to indicate that there is an individual that would like to make a public comment.
Do we know how many attendees we have?
Yes, ma'am, we do. Currently, we have 23 staff, which includes TWIA staff and the board members, and we have 40 attendees listening on the line.
Thank you.
Sure. Madam Chair, I will turn the meeting back over to you.
Thank you, Christina. So that concludes public comment. We will move on to operational highlights with Mr. Pollock.
Mr. Pollock, be sure that you've unmuted yourself.
There we go. It's a tiny little icon. As you get older, it's hard to see those things. Thank you very much. Welcome to everybody. Thank you for attending. As we've done in the past, we begin these meetings going through the TWIA Enterprise Scorecard. For the purpose of the new members in particular, the Enterprise Scorecard is designed to provide an overview of the status of certain operational metrics as of the end of the quarter. So therefore, the scorecard that you see is through the end of March of 2020. We've made some changes to the Enterprise Scorecard, and because we also had some changes to the board members, so I wanted to spend a little time explaining the metrics you see for each quarter. For each metric, you'll see a year-to-date number, and that's our goal for the quarter. The variance and a visual indicator of red, yellow, green for an at-a-glance view of our performance relative to each goal. As of March 31st, the first metric is the operating expense ratio, which is a fairly common measure of financial performance. TWIA's operating expense as a percentage of premium is below plan at 7.8%. And we'll talk a little bit more about the drivers of this. And in our case, it's mostly IT expenses. The second metric is TWIA's net gains from operations. In 2020, we changed how we calculate this amount to exclude reinsurance earned and non-admitted assets. And this allows us to show a clearer picture and one that's more comparable to how insurance companies in general measure their profitability. In our case, this calculation also indicates what we expect our annual contribution to the Catastrophe Reserve Trust Fund, or CRTF, to be, in which for many stakeholders is a measure of our profitability or success. The new calculation is explained in the footnote, equals the year-to-date 2020 net income reduced by year-to-date monthly principal payments on public securities. For the first quarter, the net gain of operations are above plan at 49.3 million, as opposed to our goal for the end of the quarter of 43.4 million. We also track the status of our enterprise projects as a measure of our effectiveness. Our goal is to have at least 90% of projects on track to be completed on time. At the present time, we are doing exactly that. We are at 97%. And the next two metrics will measure how quickly we transact business. This is a measure of our customer service, both in terms of policyholders and claimants. As you can see, we've changed the measure or the standard or objective for the policyholders, and it is now 98% of the transactions occurring between within the 10-day period. Similarly, claims handling is a measure of how quickly we turn around our claims against our objectives. Now, the other board members who are more familiar with this exhibit will notice that there's an absence of a metric for disputed claims, which we have historically shown here. Recent changes to claims reporting as a result of the sunset recommendations and legislation have necessitated a change in the way we report these disputed claims. And so as we work through those changes, we will not be reporting that metric here, but we will be adding back a disputed claim metric at some point in the future once we have implemented the changes and have a new baseline. We will, however, cover disputed claims in the claim section of the agenda. You can also find enterprise-wide data tracked at the end of the first quarter of 2020 in the panel to the right of the scorecard, just to give you a frame of reference for those metrics. If you'll turn your attention to the bottom of the page, you'll see that the following were the key accomplishments of the association during the quarter. Based on the board's decision at the February quarterly meeting, we were able to pay off 45 million of redemption of the Series 2014 bonds used for the payment of Hurricane Harvey claims. And we'll talk more about that in Jerry's presentation on the financials. We also contributed $52 million to the Catastrophe Reserve Trust Fund from 2019 net earnings, which brings our total in the CRTF up to approximately 175 million at the start of the hurricane season as of June 1. Much of the association's focus in the first quarter has been responding to the COVID-19 pandemic. Our office transitioned from a typical brick and mortars operation to a largely remote operation as our employees began working from home within a week of the notice from the governor and others. We continue to operate on that basis, and thus far we've performed effectively in that area. We've had only about 9 people in the office. Most of these are key support people, and those people are using the distancing as well as the masking requirements that are requested. We are also able to implement a temporary change to the payment options, which provides some payment leniency to our policyholders financially impacted by COVID-19. Denise Lesser-Lear will go through these in a little bit more detail when she talks through the underwriting highlights. With that, I'll entertain any questions from the board on the scorecard. Otherwise, I will turn it back over to our chair.
Thank you, John. I think that's really good that we've made a few of those changes to better reflect, operations. We're going to move on to the financial section. Just as a housekeeping issue, I'm going to watch the time and try to take a break around the top of the hour. But we're going to want to get through completely these sections as much as possible. So we'll kind of watch the time, and that's what we'll shoot for. But with that, I'll turn it over to Carice for the report of the Secretary Treasurer.
Morning, everyone. We'll start with the statutory income statement and the Treasurer's report. This is for the period ending March 31st, 2020. We show a net underwriting gain of $68,269,000 for a net income of $62,811,000, showing then at an ending deficit position for the period ending March 31st of $123,583,000. If we move to the management discussion and analysis, you'll see the summary there of the information that was just shown on the previous report, but we'll start with direct premium. Direct premium year to date of 74.6 million reflects a slight decrease, as you can see from the same period. This resulted from year-over-year policy and exposure declines and the depopulation of 2,080 policies. We'll continue on to the loss adjustment expense section. You'll see there that direct losses in LAE incurred for the quarter ending March 31st totaled 3.1 million. That was $816,000 below the prior level. That's favorable development is from non-Harvey claims, accounting for roughly 1 million of the current favorable variance. And also early spring storm activity was less severe in this quarter as compared to previous quarter. We'll move down into the operating expense in the next section. Shows a favorable variance to our budget in 2020, and that's primarily related to the timing of the project, contractors and consultant fees for our IT project and postage. And headcount was just down slightly from the 221 headcount of December 31st, 2019, now to 213 for the period ending March 31st. Also in other expenses and income, the gross investment income for the quarter totaled 1.2 million, which is a decrease from the prior year. That decline is due slightly to the lower yields on investments from the Federal Reserve interest rate cuts and lower average invested balances. In our surplus or deficit position on the final section of the MD&A, the deficit, as we reported earlier, of 123.6 million compared to the 183.8 million at the year end. So that was a favorable improvement, offset somewhat by a temporary increase in non-admitted assets. And that's due primarily to the Guidewire license fee that was paid during the quarter. So that is the summary and conclusion of the Treasury report. Are there any questions? If there are none, I will make a motion to accept the Secretary Treasury report as presented.
Carice, I will second that, but I do have a question. On the commission expense, it is up, and yet our policy count is down. I don't exactly, and we didn't take a rate hike. I'm not quite sure why I understand that, why it goes up.
Jerry, can you provide some explanation for Georgia?
Yes, looking, if you go to 6B1A, where there's a little bit more detail, you'll see that the commission income is driven by direct written premium, and that's a slight increase over reflects there's an increase in direct written premium over the budgeted amount, and a slight, a modest change between year to year, between last year and this year in terms of direct written premium. Sometimes there's, in any one period, there can be adjustments for canceled policies and the like. So essentially the 12,039 that you see is essentially flat with the 11,955. You'll have modifications, based on, timing.
And
Georgia,
this is Karen Gard. I have another question to you, unless there's still more on the commission expense.
No, that's it.
Did that answer everyone's question before I interrupt?
I mean, I'll acknowledge it looks a little curious because there's a slight drop in direct written premium from 74,777,000 to 74,590,000, or about 180,000, and at the same time a slight increase of about 80,000 on commission expense. I'll look into that further to see if there's anything unusual there, but there's some. It doesn't always track exactly. You'll see in the 2019 period, there was the acquisition, the commission plus premium tax totaled 17.9%, whereas it's usually 18% as it was this quarter.
Before we move on, my question is just also on the expense side. We talked a little bit about the IT timing of expenses leading to favorability, but my question is around, are we feeling good about where everything else sits? If I was looking back at the first scorecard and it looked like our expense ratio is up a little bit from prior years, so I just want to make sure we're feeling okay about how everything else is trending as well.
Yeah, you'll see there's some detail on expenses in the board package on B1B, and across most categories, we're experiencing favorable results compared to the budget. In particular, contractors and temporary help, both in terms of IT, where we, and this may be timing in terms of the Project Elevate, outside contractors, but also in terms of claims activity, we've had lower contractors than budgeted. So we've, in terms of the 3 months results for contractors, it was $1.5 million versus $2.3 million. And salaries, we're down from where we, in terms of headcount, we're down from where we started the year. We're down 10 positions roughly. Actually down 8 positions, excuse me. And as you recall, we had some vacancies to fill, and those generally haven't been filled yet. So I think we're doing well so far. And some of it will, some of it has to do with timing. Some of it, I think we're having a little less postage than anticipated. And other variations, but I think so far we're still confident that we can achieve the budget or do better than the budget.
Okay, I think the budget is a good thing to compare to, but I also just worry about our expense ratio continuing to creep up as we have less top line premium. So that's something I'll continue to ask about.
That's fair, and we watch it as well.
thank you, Karen. And so, Jerry, you're going to do, if I understand right, some additional follow-up that you can provide back to the board, maybe via email or something related
Yes, I'm going to look into that, commission.
Premium. Okay.
So this is Chandra. So we have a motion to accept the report and the second. Is there any other additional discussion before we vote on that? Okay, so hearing none, all those in favor of accepting the report of the Secretary Treasurer as presented, please say aye.
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 Any opposed? So the report is approved, and we'll move on to the income statement. Oh, I'm sorry, we've already done that. Well, financial statement by Jerry Fadden.
Terrific. Thank you, and good morning, everyone. I'm not going to, since that was a pretty thorough discussion of the income statement, I'll move and the expense items. I'm happy to answer any further questions on the detailed statutory income statement or the expense, the detail on expenses on those next 2 pages before moving into the balance sheet. Okay, hearing none, I'll move on to page 6B2, the balance sheet. What I would note is at the end of March, we had $465.2 million of cash. That's line 8 on the balance sheet. This included cash that was going to be used to redeem the Series 2014 bonds, the $45 million that was allocated by the board at the February meeting. The other thing to note here is the assessment receivable that was carried on our books at December 31st, 2019, had been substantially collected by the end of March. There was a small balance due from one insurer that came in the first week of April. And then I would note at the bottom of the page, line 35, that at March 31st, the CRTF totaled 176,152, and that reflected the 60-some million that we contributed on March 30th. The cash flow statement is well, let me first go to the cash and short-term investments. As noted here, in the middle of the page, you can see that the blended rate of our interest-bearing investments is 0.35%. As was mentioned in the Treasurer's report, that's down, reflecting the current interest rate environment, and down substantially from what we were experiencing last year. We expect that will continue for the near term, so we expect an adverse variance with our budget in terms of investment income. The cash flow statement is on the next page. Line 12 shows the collection of the member assessment versus the budget. I would also identify line 16. This was the 52.6 million of statutory funds that were paid in the first quarter. And the line 30 reflects the ending March 30th cash balance, March 31st cash balance. This, as I mentioned, it includes the amounts that were dedicated towards the redemption of the Series 2014 bonds. That redemption closed, was funded yesterday. So you'll see that by June, our debt balance will have been reduced. The next section is one you've seen repeatedly. It's updated for the results through the end of March, and it reflects the historical data going back to the origins of TWIA in 1971. We, as in the past, have recently included a supplemental page to aggregate those numbers in a way that shows, how funds are coming in, what they're being dedicated to in terms of expenditures and how payments of losses are being made. And finally, we show the history of the CRTF balance on that page. The next page, item 6B6, is a new page. This reflects the net revenue coverage covenants that we report in connection with our public debt. On a quarterly basis, we send this report to the Texas Public Finance Authority, and we post it on the municipal bond website. It shows, we report the ratio for the previous 12 months as well as the projected next 12 months. And without going into the detail, it essentially shows our net revenue, meaning our premiums less ongoing expenses, excluding any catastrophe losses. And that's looked at in comparison to our debt service, the principal and interest payments on our securities. So I would just note in the gray area the numbers that have been reported there over the last several years. Are there any questions before I move on to the investment plan? Okay, then the next section, 6C, is the investment plan review. Annually, the board is obligated to review and approve the association's investment plan, and we've provided a copy of that plan in this section. The investment plan is unchanged from last year, and it continues to emphasize high-quality liquid investments such as the CDs of highly rated banks and U.S. Treasury money market funds. We have in the first section, there's a memo from me to John Pollock. It just provides a brief overview of the investment plan, and it includes on the top of the second page, a suggested resolution for the board to, with respect to its acknowledgement of its review of the adequacy of and implementation of the investment plan, and with respect to the staff's recommendation to make no changes to the document this time. So with that, I just I would encourage the board to consider a motion to this effect.
Madam Chair, would you consider a motion?
Yes, ma'am. Would you like to state the motion or just as presented?
I'll state it. The Board of Directors of the Texas Windstorm Insurance Association acknowledges its review of the adequacy and implementation of the Statement of Investment Objectives and Guidelines of the Association, and accepts staff's recommendation to make no change to the document at this time. So moved.
Second.
Thank you, Ms. Template. Is there a second?
Tim Garrett, second.
Thank you. Any discussion? All those in favor, please state aye.
Aye.
Aye. Aye.
Aye.
Any opposition? Okay, the investment plan review has passed. Jerry, if you continue with section D,
Yes.
please.
Yes, thank you. The next section is intended to provide an update on the various funding activities for the 2020 hurricane season. The first topic relates to our line of credit. As you recall, over the last 2 years, we've annually secured a $500 million line of credit with JP Morgan Chase and Bank of America as part of our catastrophe funding plan. We have the ability to draw down on this line of credit in the event of a hurricane, provided that we've received approval from the commissioner to issue Class 1 securities, or if we were unsuccessful in issuing that debt, approval for a member assessment. So the line of credit provides TWIA with immediate liquidity to pay claims while we're pursuing the process of issuing debt, which may take several months. We initiated discussion with the banks to renew this credit facility several weeks ago, and we found that due to the substantial dislocation in the credit markets and general uncertainty looming over the economy as a result of COVID-19, the banks were compelled to increase the pricing on this facility. And though we've had some extensive negotiations around the pricing and we sought other alternatives, and we've ultimately made some modest progress, but nevertheless, the commitment fee for this facility will be 80 basis points on the committed amount compared to 40 basis points last year. And the borrowing spread over LIBOR, if we were to draw down funds, has increased to 130 basis points. This pricing condition seems to be prevalent in the market, and so this is not a TWIA specific situation, but we are bearing the cost of relatively challenging credit markets. I expect, but there's no commitments, that if and when the credit markets return to, quote, a more normal state, I would hope our pricing would improve, but only time will tell. But we do, this facility is an important part of our funding structure, and we are now in the process of documenting it with the intention to close by June 1st. Are there any questions there?
Can you translate the cost of 80 basis points versus 40?
Yes, it's this particular facility is it begins June 1st, and we usually terminate it at the end of December. So the commitment fee is charged during that period, and the incremental 40 basis points will cost us an additional $1.4 million, basically twice what we paid last year. So $2.8 million versus $1.4 million, which is painful, but unavoidable.
And so, Jerry, this is Corey. So Jerry, the comment you made about maybe being able to take advantage of better pricing next time, that wouldn't be until then, this time next year again, correct?
Correct.
So we're stuck with this situation for this period.
Yes, exactly.
And we did shop it.
Yes, we saw it. This is a very large credit facility, and we reached out to other banks to see if they would be interested in leading it. And given the circumstances, there wasn't that interest. So unless there's any other questions, I'll move on. A full term sheet describing the line of credit is included in your package, and I'm happy to answer any questions on that now or following the board meeting. The next, I would state that there's in addition to the line of credit, in addition to the term sheet or proposal for the line of credit, there is a resolution of the board which we would seek to have approval for to move forward with the closing.
It's Chandra. Thank you, Jerry. Yes, we do need to vote on this, and we need to accept this resolution as presented. It's pretty lengthy, so I would spare everyone reading it. Is there a motion to accept the funding as presented?
So moved. Second.
I'm sorry, who was the second?
Tim Garrett.
Oh, thank you, Tim. I don't recognize your voice yet. Is there any further discussion on the line of credit? Okay, hearing none, we'll take a vote. All those in favor of accepting the proposed line of credit as proposed on the resolution, please state by saying aye.
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 Any opposed? Okay, the resolution is accepted. Jerry, you can move on to the next section.
Sure. The next item, 6D2, there's no material in your board book, but it just, as I mentioned a moment ago, we just closed the $45 million partial redemption of the Series 2014 bonds, so that'll bring down the balance from about from 318.6 million to 263.6 million. So I just wanted to thank the staff at the Texas Public Finance Authority for their assistance and leading this transaction. They did a fabulous job and helped us out there. So with that, I'll move on to an update on the funding stack for the 2020 hurricane season. As directed by the board at the February meeting, we intend to have in place $4.2 billion in coverage for the 2020 hurricane season. This will include the $2.1 billion in funding that's provided by a combination of TWIA's earnings, the funds in the CRTF, and alternating layers of debt and member assessments as provided by statute. In addition to that funding, there will be $600 million of catastrophe bonds that were issued in 2019 and 2018 that will remain outstanding in 2020. We will add to that a new catastrophe bond with a target size of approximately 200 million. So assuming that target size, we would have 800 million in total of catastrophe bonds in the 2020 program. The balance of the 2.1 billion required, we intend to place in the traditional reinsurance market. That'll be in the amount of 1.3 billion. Depending upon the pricing differences between the catastrophe bond market and the traditional bond market, we may increase or decrease the bond or the traditional reinsurance, but this is what our target size is at present. As I think may generally have heard, we are the overall industry, reinsurance industry that is, has had some disruption to it, like other industries, in terms of the impact of the COVID-19 pandemic. While this is not relevant to TWIA's portfolio, many reinsurers are anticipating significant losses from business interruption and other commercial coverages as a result of the COVID-19. That plus the general investment losses that may have occurred in the first quarter has resulted in a general increase in the so-called cost of capital. So we're hearing the drumbeats of reinsurers seeking higher returns on their exposure. We're in the middle of those discussions, and we've so far had some favorable responses from our reinsurers who've been big supporters of ours. So while it's a difficult market, I remain optimistic that we will successfully place the reinsurance and that we will have relatively good pricing despite an overall challenging market. We will certainly update the board as we finalize pricing and we, along the lines, we expect it to be not as good as what we've achieved in the past, but remains to be seen exactly where it comes in. Any questions on that? Then I'd like to turn the floor over to Mr. Clark Thompson. He will provide a report on the conclusions of their audit of TWIA, including the audited statutory statements, the so-called GASB statements, and their internal control letter. Clark Thompson is a partner with the auditing firm of Calhoun, Thompson, and Matza.
Good morning. You should have 3 documents, or perhaps 4, including both audit reports. We have an audit wrap-up letter. We have both stat and GAAP basis audited financial statements, and a letter on internal control. I'm going to go over the wrap-up letter. On page 1, we talk about the status of the audit. We have completed our audit. Our audit was conducted in accordance with the auditing standards generally accepted in the USA. Our opinion, dated April 23rd, 2020, was unqualified, which is the best type of opinion. All records and information that we requested were freely available to us. Management and other association personnel provided full cooperation. On page 2, we talk about the results of the audit. Accounting policies. The association's significant accounting practices and policies are those included in Note 1 to the statutory financial statements. These accounting practices and policies are appropriate, comply with accounting practices prescribed or permitted by the Texas Department of Insurance and industry practice, were consistently applied, and are adequately described within the notes to the statutory financial statements. And significant estimates. Significant estimates includes loss and loss adjustment expense reserves and deferred pension benefit. Management did not make any significant changes to the processes or assumptions used to develop the significant accounting estimates in 2019. Then we have corrected and uncorrected misstatements. There were no corrected misstatements as a result of the audit, and there were also no uncorrected misstatements as a result of the audit. On page 3, internal controls or financial reporting. In planning our audit, we considered the association's internal control of financial reporting as a basis for designing our audit procedures, but not for the purpose of expressing opinion on the effectiveness of internal control. We then present a definition of each type of control deficiency on page 3. We have also issued a letter indicating that we did not identify any material weaknesses, and that letter's been provided to the board. On pages 4 and 5, we have some additional required communications to those charged with governance. There were no disagreements with management during the audit. We are not aware of any instances where management consulted with other independent accountants during the year. Prior to being retained as auditors, there were no major accounting issues of concern discussed with management. We encountered no significant difficulties during the audit. We requested and received a representation letter from management, which management has provided to the board or is about to. There are no other issues arising from the audit that we consider significant to those charged with governance. And there was no discussion with management concerning alternative accounting treatments. On page 6, we talk about independence. Our engagement letter dated October 18th, 2019, describes our responsibilities in accordance with professional standards and certain regulatory authorities with regard to independence. This letter also stipulates the responsibilities of the association with respect to independence as agreed to by the association. So please refer to that letter for further information about independence. Regarding the other documents, I've already made reference to the internal control letter. And since there were no audit adjustments, I was not going to go over the financial statements as you've already seen these numbers previously. So unless someone has a question, that concludes my presentation.
Thank you, Clark. So looks like the next is the statutory report.
I just mentioned that
okay, so we do have to make a take action on that and accept that.
Yes.
Hello, Madam Chair, this is Mike. Normally what we do here is that we have a resolution that acknowledges receipt and accepts these reports and acknowledges review by each of the board members.
So that's for both the statutory report and the GASB?
Yes, ma'am.
Okay. Can I get a motion? Does anyone want to make a motion to accept the statutory report and the GASB report as presented?
Yes, this is Corice. I'll make that motion.
I'll second the motion.
Any discussion? Okay, all those in favor, please state aye.
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 Any opposed? Any opposed? Okay, the reports are accepted. Before we move on to the next section, it looks like it's 9:58 currently. I think we should probably just take maybe a 10-minute break and return back here at, well, we'll just say 10:10. That way we can move on to the next section, which will be actuarial, which will probably take a little while. So with that, can we just take a 10-minute, well, 12-minute break, I guess?
Thank you.
Okay. Thank you, everyone. We'll just take a break and we'll come back at 10:10. Amy, are we ready to resume? Hello?
I forgot about the muting thing. Jenna, are you ready to get started?
Yes, ma'am. Are you ready to resume?
I believe so. It is 10:10.
Okay. All right. Thank you. It's 10:10. We're going to move directly into section 7. Jerry?
Before we go, Chandra, I meant to make
Yes,
a
ma'am.
comment on the last agenda item. Can we back up just a second, please?
Sure. Yes, ma'am. Of course.
I just think if the board should take the opportunity to look at the audit. If you go to page 111 of the PDF or page 29 of the report, you can see the defined benefit plan and the organization's obligation to that. And I've mentioned it several times. I still think the board needs to take a look at what our defined benefit plan is and how it works in relationship to our overall expenses. That's all I wanted to say, so we can move on now.
That's fine. John, is that something that we could get a little bit more information on for the next meeting?
Certainly. Certainly, we can take care of that.
Hopefully that will help explain to Georgia and, of course, the rest of the board too, where that stands, and
Okay.
make sure everybody's comfortable with where that's headed. So,
All right.
any other comments until we pick up on actuarial? Okay, hearing none, let's, Jerry, go ahead. Jerry, are you back with us?
I'm muted. Oh, I had been muted by the organizer. In any event, continuing to the actuarial section, you'll see that we were providing the usual quarterly opinion from our senior actuary, Shu Lee. In that memo, she reaffirms the ultimate loss and loss adjustment expense for Hurricane Harvey at 1.7 billion. As you'll hear later from David Williams in the claims report, the number of open claims is substantially reduced to under 1,000, but there still remains some uncertainty there with respect to the adequacy of case reserves for those open claims. So with that, there is continues to be some uncertainty with respect to the ultimate loss and loss adjustment expense, but we're comfortable that $1.7 billion adequately covers those estimates at this time. In addition, the memo substantiates that the carried loss reserves include the carried net and gross loss reserves continue to be adequate and meet the requirements of the insurance laws of Texas. On the second page of this section, you'll see detail on the components of the Hurricane Harvey ultimate loss estimate. Our actuary provides estimates, both low estimates and high estimates, and then selects a point in between that is her best estimate of the required ultimate losses. And you can see there that the total of paid losses and paid loss adjustment expense is 1.5 billion, and therefore remaining we have anywhere from 90 million to 170 million of potentially required incurred but not reported loss reserves or case reserves, but the point estimate is $1.7 billion. The next section, we regularly report, and it shows policy counts by county comparing this past March month end to the prior year. We've talked about this in the past, but the percentage decline is at 5.3% year over year. That's somewhat better than we've experienced in the past, so perhaps the decline is slowing in rate. I'd also point out that the exposure growth is a negative 3.4, so total limits are declining at a less rapid rate. The detail by county follows. Nothing to note there. The only thing I would note.
Just a second, please.
Say that again. I'm sorry.
May we back up to the reserves for
Yes.
just a moment? We are still carrying a reserve for Ike, are we not?
Yes,
And
we are.
is that included in our report or is it by separate report?
It's not specified separately in this report, but it is part of the reserve review that that our actuary conducts, and we do continue to have carry loss reserves, both CASE and IBNR for Hurricane Ike.
I think that we should at least footnote that in the report, because
Okay.
if you read it, it doesn't really speak to it at all. You just got the next thing too fast. I couldn't get a word in.
I'm sorry.
I'm not sure. This is Mike Garrick. I'm not sure I agree with that. There's actuarial standards that they have to follow, and pointing out specific reserves like that on a specific loss, I don't believe it's something we want in a public report.
Well, I'm not talking about an amount, the fact that we do have it. Otherwise, how would the board ever know?
Well, we go over Harvey at every board meeting and have ever since we've had it. Same with Ike. We know what those claims are and we know what those reserves are. We have updates at every meeting on that.
But we're reporting the reserve that we do have adequate reserves for Harvey. Should we not also include that we still have adequate reserves for Ike?
Well, the overall, in my opinion, and I'll let Jerry and the actuary talk about, the reserve opinion is overall, all reserves are adequate.
Yes, Mr. Garrick, I agree with that. When we talk about our total gross loss reserves or total net loss reserves, we're talking about our balance sheet reserves, which will include Harvey and Ike and non-hurricane reserves. I'm happy to add a sentence with respect to that we continue to carry reserves for prior periods, but as Mr. Garrick suggests,
fine. It just makes it a more complete. No,
I don't have a problem with saying something about prior storms, but being specific to a specific event is basically just saying I'm not going to say any more other than that. I think for prior losses, but that's what reserves are for.
So we'll endeavor to see if we can thread the needle and assure you that the reserve report includes reserves that we would include for prior catastrophes, including Ike, but without getting into the specifics. And our reserve, when the actuary and including our outside actuaries, Milliman, who substantiate, who do their own reserve review and provide a peer review of our work, they're usually talking about reserves in the aggregate as opposed to individual situations. They might analyze those individual situations, and I know in the case of Ike, they do review the outstanding litigation, but the reserve opinion itself is on the total reserve balance. But we'll try to enhance our disclosure there while respecting the need for some confidentiality with respect to specific cases. So thank you for that question. The next section, as I was describing, is about to say that towards the end of that detail on policy counts, the one item I would note is that by the end of the quarter, and this is on the very last page of the policy count information, you'll see total all counties, and our commercial policy count is down to 6,871 out of the total policy count of 187,189. That's in the second column from the right. I'd also point out that in those commercial policies, there are, in many cases, multiple risks or buildings identified, and so the risk count is 12,244 out of a total risk count of 198,000. And happy to entertain any questions on those, the policy count and exposure information. Hearing none, I'll move on to the status of the RFP for actuarial services. You will recall at the meeting, the board meeting in February, after a report from the Actuarial and Underwriting Committee, in previous meetings, there was a direction from the board to the staff to undertake a process through which we would identify an actuarial consulting firm that would provide a independent actuarial analysis of our rate adequacy. And including in that analysis, there was an interest in the board receiving information with respect to insights into the differences between the two catastrophe models that we rely on, the RMS and AIR, with the board having observed that the 1 in 100 aggregate PML for the two were significantly different, approximately 1.5 billion apart. We commenced that process and solicited proposals from 15 nationally recognized actuarial consulting firms. We received 8 proposals prior to the deadline, and in the initial meeting of the Actuarial and Underwriting Committee to review those proposals, the proposals, the vendors or actuarial firms were reduced in number to 4, a short list of 4 firms, with the intention that a subsequent meeting would narrow that down to a winning firm. Before that meeting was scheduled, the COVID-19 pandemic grew in significance, and based on that factor, as well as the encouragement from various coastal legislatures, it was recommended that that meeting be, that second meeting of the Actuarial and Underwriting Committee be postponed, and that's the current status. We've not yet had that meeting, and I think wanted to bring the board up to date on that and get any further direction as necessary that the board feels appropriate.
Thank you, Jerry. This is Chandra. So, I mean, I think it's important that we continue along that process. However, you know, the timing of it is a little off. Does staff have any recommendation on the timing of the second meeting? And would that look like an in-person or a virtual meeting?
I think, given the current circumstances, I would expect that that would also be a virtual meeting with presentations, you know, webinar type presentation by the short list of vendors and then a subsequent decision by the actuarial and underwriting committee and a recommendation to the board, or a decision on the part of the actuarial and underwriting committee. The staff is open to the preferences of the board. We're sort of running a little short on time here to get someone engaged and up to speed, but can still accomplish the objective. But you know, the current environment may be such that we would, you know, might want to take a different tact and do this at some later date.
Is Debbie King on the call today? Or someone else from the? Okay.
I'm here.
Hi, Deb. So do you have a recommendation of what that timing would look like, or what you would like to see for that committee?
We had Amy had sent out some potential dates, I believe next week. I don't know if Amy can confirm that. I think that worked for the committee. I think the dates, maybe what Jerry's saying is that, you know, the work has to be done and then presented, right, time to complete to present for the August board meeting. And that's where I think the committees can meet soon, but, you know, we have to make sure we have enough time if we still plan to move forward with a recommendation for the August board meeting.
And, you know, I think that's the goal. However, you know, we do have to make a rate filing in August, but we could always adjust it later if we get new information based on the recommendation of the actuarial committee. So because of the current situation that we're in, it's going to be very hard to probably meet all those deadlines and timeframes, but we can certainly try to make them. So we'll just have to see what situation we're in, and then of course what legislative instructions we get as well. But yeah, if we could just proceed on with that. I see that we have an action item for this. Do we just need to? What does our action item need to be?
Hello, Ms. Womack. This is Mike Perkins. The asterisk there was really just in contemplation of the possibility that the board might have some specific instructions or change of direction. It does not sound from your comments, although we haven't heard from other board members yet, that is likely to happen. With respect to moving forward with the meeting, as Ms. King has indicated she wants to do, that certainly works perfectly well for staff. Just one point to make: under the various deadlines that we have for noticing public meetings of this type, we will have to post notice of this meeting at least 11 days before the meeting is held. So I think the next week dates that had been discussed, we've already passed enough days on the calendar that those dates are no longer available from a notice standpoint.
Okay, thank you, Mr. Perkins. So does anyone else on the board have any comments or information that we'd like to share before we direct them to continue in that direction? Yes, ma'am.
I'm on that committee and I hope we can meet as soon as possible.
Okay.
Yeah, this is Corice. I would agree. I'm also on that committee and I would be willing to meet as soon as possible. I think we should give it a shot over the virtual, you know, situation and see how it goes.
Okay. So I guess the only direction I would give at this point is have Amy send out a new list of dates that we can give appropriate notice and get those scheduled as soon as possible.
Thank you, Madam Chair. I don't think you need formal board action or a vote on that. I think we can put that in the category of staff just following your instructions, ma'am.
Okay. That's
Yes,
great. Okay.
We'll coordinate with Amy and the short list of vendors to make sure that they're available and coordinate a presentation. And so that's very helpful. And we will work very hard to get that completed in time for the August review and proceed accordingly.
Thank you. I appreciate all the work y'all have done to this point on that. And thank you, Debbie, for your contribution as well. So I guess we're going to move on now to section 8 with Bruce, internal audit.
Well, good morning, Chandra. Good morning, everyone. If you turn to section 8, laid out a memo of current activities and upcoming activities. And under our current activities, we have completed and submitted to y'all vendor management analytics audit and the business continuity audit. And so that is complete. And in process, we have accounts receivable, underwriting, which are in their final stages, and reinsurance is kicking off along with the database and application administration audits. Upcoming activity, we've laid that out for you below as to when we anticipate that those fieldwork dates to start. And of course, we are in attendance of anytime the ALT meets, we are in attendance for those meetings. If you go to the next page, next slide there, it outlines our 3-year audit plan. There has been some discussion about, with COVID-19, how the enterprise risk environment has changed, and it certainly has changed. We have had some discussion with management, and we'll continue that in the upcoming weeks, and we'll do a reassessment at a high level of the risks to the organization. And one of the couple things to point out here, the reinsurance risk actually from the risk assessment is moderate, not high, though given the current reinsurance environment, that is trending higher. It most likely will end up high, though that's one of the areas that we'll be reassessing. And also, like facilities and services, we during our risk assessment process, we assess that as low. As you can imagine, with people coming back due to COVID-19 and the procedures that have been put in place, that area will now most likely become a high risk area as we look at that, how people are entering the building and the precautions that they're taking during their day. So there will be a reshuffle of that, and I thought it'd be worthy of the board. And during our preliminary discussions in board prep, that question came up. So wanted to make sure that we shared that with the board. Some of the things that are trending, just to keep you aware of, will be reinsurance, cybersecurity and fraud is definitely a trending item. Data ethics and governance are trending higher. Talent management is trending higher, as is risk assessment over black swan events. Those are the unusual events that happen. The organization did have pandemic in its existing BCP plan, and I know that those have been tweaked up and modified as we actually experience a pandemic. So with that, Madam Chair, I'll turn it back over to you and open it up to any questions.
Thank you, Bruce. I know that in the board prep, we had talked about all the potential impacts that this COVID-19 could have on the risk, and so I appreciate you addressing that. Does anyone else have any questions? Otherwise, we'll move on to underwriting.
I just noticed that the claims processing and the disaster recovery field work were right in the beginning of hurricane season. I wondered if that was by design or by accident.
No, yeah, they're at the early in the June time frame, Georgia, and no, it wasn't intended that way. We had worked with claims management to see if that was okay. Currently, it is. We know we've been put on notice that if an event happens, that we will need to reschedule that audit. So we didn't land there intentionally. We try to do it early on because we know that the risk tends to go up in that July, August, September time frame, and so we just tried to work around those heightened dates. So that's how we got there.
Thank you.
Thank you, Georgia. Thank you, Bruce. Are there any other questions for Bruce before we move on? Okay, hearing none, we'll move on to Denise with underwriting.
Thank you all.
Thank you. And of course, as luck would have it, a severe thunderstorm decided to sit over my house about a minute ago. So if you hear noise, it's thunder. In addition to my regular operational quarterly update today, we have a recommendation regarding mailing methods that we would like to present to the board. And if the board agrees, we have a written proposed resolution that is in the board material. So starting with the operational update for the first quarter, January through March, we continued to have consistent turnaround time on all of our transactions. Over 98% of the transactions are handled within the 10-day period, and close to 85% of the new business and renewals are processed within 1 day, so instant straight through processing. Quality of underwriting decisions and telephone quality continue to exceed goals. As a side note, even with the underwriters and the agent services rep working from home during the pandemic, we continue to monitor the telephone calls and quality. And if anything, we've seen an improvement in the empathy and patience categories that the underwriters and agent services reps are dealing with. We're operating below budget, partly due to fewer inspections and a renegotiated pricing structure for our major inspection service. To comment on a couple of the legislative implementation program changes, the first one is regarding the new renewal process. And if you recall, SB 615 required that we would automatically renew or send directly to policyholders the opportunity to renew their policies with anything that renewed March 1st or later. The new process allows for the policyholder or a mortgage company to pay the renewal directly if they choose. They can still use their agent if that's what they want to do. But what we found during the very first month of renewals of March is that approximately 44% of our renewal payments were received from either the policyholder directly or the mortgage company. In April, that percentage increased to 55%, meaning that 55% of the policies that were renewed were done without agent involvement, or the payments came directly from policyholders. Other things to note that are kind of interesting are that the lapses are actually down with the policyholders that pay directly, and that they tend to pay their bill about 10 or 15 days sooner than when it renews through an agent. My guess is it's just how workflows are. We have done a really aggressive communication plan to policyholders. And so 75 days prior to their policy renewing, they receive a postcard, because most are not used to getting things directly from TWIA. They receive a policy packet about 60 days prior. They get a reminder at 25 days prior. And so we think that that's really paying off as far as policyholders knowing how to send payment to us.
Denise, can I interrupt
yes.
you here?
Sure.
If you renew, which I did, directly with TWIA, does the agent still receive a 16% commission?
Yes, ma'am.
Heidi, no.
Anything else?
No.
Okay. Mr. Pollack mentioned our temporary payment leniency program that was implemented beginning of April. And for policyholders that are experiencing any financial hardship due to the current pandemic, the payment process works like this. Rather than having to pay 100% down of the premium, of 100% of the premium prior to having a policy issued or renewed, the policyholder can pay as little as 25% down. The remaining balance is due 75 days later, and if the balance is not paid is when we send a notice of cancellation allowing for another 15 days. So in essence, they get about 90 days to have to, before the policy would cancel if they didn't pay the balance. During the month of April, which was the first month that we had this going, about 2% of the payments received took advantage of the temporary payment option. And finally, the agency compliance audits, very similar to what we reported in the past. We have had, good results as far as getting agents to respond, and where they don't have the correct information, we work with them and allow them time to get the correct information if it's a declination or flood insurance, that type of thing. The next item that I'd like to discuss is the recommendation to the board regarding the approved mailing method for payments. I saw that I forgot to mention anything about the windstorm certificates, but it's interesting. So I'll kind of back up a minute because there was there's the chart. Since the program began for TWIA to issue the windstorm certificates, we've issued almost 33,000 windstorm certificates. We'll continue to monitor this program and administer it until June 1st when it goes back to TDI. And at that point, TDI will be issuing all windstorm certificates for both completed and ongoing improvements. It makes sense that right now the numbers have gone down. You can see from that chart, they peaked during right after Harvey, and now they've gone down to a lower level. All right, so the next slide is the recommendation about approved mailing methods. And just as a little background on this, during a recent agency advisory group, the AAG group asked that TWIA investigate changing the approved mailing methods for payments. The current plan of operations states that the application is effective on the date the payment is received by TWIA, unless the payment was sent by registered or certified mail, USPS Express mail, regular mail hand canceled, or any other approved methods. The concern that the agents really had was that policyholders may not fully understand the mailing methods and that they were very specific and limited. So for instance, if somebody overnighted us something via FedEx, that was not considered an approved mailing method. The staff is recommending updating the approved methods to include any traceable method. And so if the board agrees to making this change to change the language to include those 4 items as well as any traceable method, we have a resolution listed below. It's quite lengthy. I'm happy to read it. Otherwise, would entertain some discussion or a motion to approve the recommendation. Any
Tim
discussion?
Garrett, I'll make the motion to approve the resolution as stated.
I'll second.
We have a motion and a second. Is there any discussion? Denise, my only question is, what are you considering traceable methods other than these ones stated explicitly?
It would be, FedEx, UPS. There's a number of mail couriers that they would be able to show something other than just the postmark date.
Gotcha.
And most of the time, it's just basically when it's received in the office. It typically is during a storm that this becomes very important because people want to be able to prove that they've put it in the mailbox to us prior to a storm moratorium.
Excellent. That was my question. Okay. Is there any other discussion? Okay. So we'll take a vote. All those in favor of accepting the resolution as presented by staff in the memo, please say aye.
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 Any opposed? Okay, the resolution passes. Denise, do you have anything else, or is that?
Nope, that's it. Thank you.
Okay, thank you very much. So we're going to move on to claims. Dave Williams. Dave, we're not hearing you yet.
Can you hear me now?
Yes, sir. Thank you.
Great, thank you. That was strange. My microphone was working. Well, anyway, thank you, Madam Chair. As I've done in the past board meetings, I want to direct the board's attention to the handout, the TWIA Harvey Claims Update. I think this is a good news report. We've been very active in resolving claims this year. We're down 168 Harvey claims since the last board meeting, so we've got now less than 840 open Harvey claims. Our payouts have been slowing. we've only paid out just under $12 million since the last board meeting, which represents just over 140,000 a day. We continue to actively pursue getting these claims resolved, and I think you'll see when we move on to the next sections that the appraisals are going very well. So that's a nice segue into the second page, which shows the number of disputed claims. The number of appraisals is up slightly to 926, but if you look on page 3, we've now have awarded many of the appraisals. In fact, since I printed this report, we are now at 92% awarded, only 8% active. We only have 75 active appraisals now, down from 146 in January. And then you can see at the bottom of the page, the average demand at 155,190, the average net award 28,811. And just to clarify, the average demand before appraisal is only on those that have had an award. We don't know necessarily what the demand is until we actually get into the appraisal process. Moving on to page 4, it shows our 2020 operational results for those claims received in 2020. Happy to report that our cycle time from first notice of loss to payment is very good at 8.3 days against that less than 16-day target. And our new claim volume was 53% less than we saw in first quarter 2019. So as Jerry alluded, we had a pretty good quarter for losses. Just to give you a little foresight, April was a very quiet month for storms, and we're hoping that continues.
I know here in Austin, we're having quite a bit of storms.
And
Dave Williams, Dave, can you back up just a little bit? We lost your audio for just a moment.
That's strange. Where was I?
It just cut out for just a small, maybe 10 seconds. I know we have a lot of storms happening in Austin, so that could be affecting the GoToWebinar system. So just a tiny bit.
You were saying April. You were saying April was a quiet month.
Yeah, April was a quiet month, and knock on wood, May is continuing to be somewhat quiet, although today could prove otherwise. I'm not far from Denise, and the storm here is pretty intense. Moving on to page 5, as John had mentioned earlier in the meeting, we removed the disputed claims from the scorecard, and this is the replacement report that is designed to comply with the recommendations from Sunset and to provide more clarity about the number and percentage of claims with supplemental payments, and then behind the scenes, how long those claims are staying in a supplemental payment status. So what we do with this report is distinguish between a claim disagreement and a disputed claim. A disagreement simply means that the amount that we've paid or offered to pay is different than the amount the policyholder wants. Most claim disagreements are resolved through supplemental payments, and they don't go through a formal disputed process. We'll still continue to track formal disputed processes in this report. One of the other things that we're working on, and we should have for the August board meeting, is a new CAT report format, which is also designed to further comply with the Sunset recommendations, and will track in more detail the phase that the claim is in. So when we make an initial payment, we'll be able to track the amount, the cycle time, and how long it was in that phase. And then we'll also have a supplemental payment phase where we'll be able to keep an eye on how long those claims are staying open with and without payments. We're also adding to the report the ability to track personal property or contents claims, as we call them, additional living expense claims. Why is this important? Because many of those claims we make advance payments, and then we have multiple supplemental payments, and then we make a final payment. So for personal property and ALE claims, we'll be able to track where it is in the phases of those unique claims. And then lastly, we'll also be tracking increased cost of compliance code upgrade, which can last 1 or 2 years after a storm. So hopefully we'll be able to present that at the next meeting. And I'm happy to entertain any questions. That's it for claims.
Thank you, Dave. I don't have any questions unless anyone else on the board does. Otherwise, we'll move on to the claims litigation with Mr. Durden.
Thank you, Madam Chair, and good morning to everyone. I'll start first by just making a comment on the report, we've made a slight change to the first page because typically we've shown pre-HB3 and HB3 numbers for claims in suit and letters of representation received and closed during the quarter. The pre-HB3 numbers have routinely been 0 because we're not receiving any pre-HB3 claims and we're not having much activity on the 8 claims we have pending. So we've removed that category from the report, and then whenever there's a change on a pre-HB3 matter that's not reflected in the month-end report, I'll report that activity to the board specifically. So if you look at the numbers, we received 26 claims in suit during the quarter and closed 21 matters. We received 52 letters of representation and closed 79. Going to the next page, we'll continue to show the pre-HB3 matters in our inventory, and you'll see in the top chart shows that we closed 2 pre-HB3 matters in March. Our ending inventory of claims in suit is 476, and for LORs it's 336. The total claims and suits and letters of representation is 812, and 745 of those are active unsettled claims, and 67 are settled and awaiting closing documents or final bills. The next page shows the distribution of our active matters. For pre-HB3, you see that we have matters in Chambers, Galveston, and Johnston counties. Regarding the HB3 active matters, 29% are in Nueces County, 26% are in Jefferson County, and Aransas and Galveston counties each have 13% of the active matters. Then the last chart just shows the distribution of cases by plaintiffs by plaintiffs firms, and Daly and Black has almost 41% of the active matters. A distant second is the Scott Law Firm with just 8% of the active matters. And then you also notice on this chart that we have a substantial number of firms with only a few matters, that last category on that chart. That concludes the litigation report. I'm happy to answer any questions that you may have.
Thank you, Mr. Durden. I don't hear any questions, so we'll go ahead and we'll move on to operations with Cameron.
Thank you.
Thank you, Madam Chair, and good morning. I'll be providing an update on the Elevate program. And just to refresh our memories, Elevate is a program to move off of all legacy applications to a new platform, one which supports installments, self-service, and credit cards for TWIA. It essentially leverages the FAIR Plan implementation, which we deployed in 2018, to create what we call a single instance. That is basically a single system, a platform with both the same hardware and software, which runs both companies and has a positive impact on IT OpEx, as I'll be sharing. So I'd like to start with a brief history of the TWIA program. In December of 17, we moved the program out to 2020, mainly due to a focus on Hurricane Harvey and the response to Hurricane Harvey. In December of 18, we presented the program benefits and some initial estimates. In February of 19, the board was updated again, and we started the inception for the program. In May, we updated the board again regarding some of the major capabilities and the progress we'd made. In August, we continued the update, and we concluded our inception, which allows us to have a better feel for the requirements for the program. We also named the program Elevate. However, due to the legislatively mandated changes, we put the program on hold to allow us to address those changes. In December of 19, the board was updated again on plans and the inception-based sizing. Some of those slides I'll be sharing with you. And as of February this year, we started development, and currently Policy Center and portals are in construction and development is underway. Billing Center and the Enterprise Data Warehouse are set to start development in a few days. If we move on to the next slide, we see some of the benefits of the TWIA program. First off is a reduction in operational expenses once we're deployed. We conservatively expect to see a 28% reduction in the IT budget. As far as self-service for policyholders is concerned, we will be providing that through our portals, and the same applies to agents who will have a newer, better self-service portal. We expect to see reduced training overhead simply because we have a single interface and similar workflows for both companies. We expect to have better service to policyholder and agents and to eliminate any customer IT issues with rendering documents and all. And of course, in the future, we expect to see reduce recurring upgrade costs because we'll have a single system to upgrade and not multiple systems. And then once this program is in place and the software is running, we expect to see additional savings in the future as we move to the cloud for more efficiencies. The next slide just provides an estimate of the project costs. And the bottom line is a little over $15 million to implement this program. And it includes portals, claim center, the migration of data onto the new system, policy center, billing application, and the data warehouse. So based on the projections, the next slide, savings from the investment that we're making. Essentially, we expect to see a little over $5 million a year in reduction, mainly due to contractor headcount reduction and services reduction. Moving to the next slide, it provides a cost-benefit analysis. And as we look at the slide, on the left, we see that we're making an investment of a little over $15 million. And in the subsequent 3 years, expecting to save $5 million a year. And so by year 5, actually being in green again. The next 2 slides are just the roadmap that we've had for TWIA for the past 5 years. And what it shows is that we've completed all of our programs. And the last remaining major piece is Elevate to get us on a single system. The last slide just again reiterates the same thing from a process perspective and for other supporting infrastructure projects that we're pretty much done. And we're just working on maturing the organization on an ongoing basis. And with that, that concludes the IT portion, and I'll be glad to answer any questions.
Thank you, Cameron. Does anyone have any questions? Otherwise, I guess we'll move on to Denise with depopulation.
Thank you.
Thanks. We're currently about to have our 4th round of policies pop or move from TWIA back to the companies that are assuming them on June 1st. For this round, we have 2 carriers participating, and approximately 1,800 policies were selected by the carriers and approved by agents. At this time, we're in the policyholder opt-out period, and they have until May 31st to either opt out, or and if they don't, they stay in the program. With cancellations and opt-outs, we're expecting right around 1,000 policies will be assumed by the 2 carriers on June 1st. Over the 4 years that the program's run, the assumption as well as the voluntary program, we've seen about 20,000 policies be assumed by other carriers. At the last board meeting, Mr. Garrick asked what the impact of the depopulation programs have had on the characteristics of our book of business. The very simple answer is very minimal. We are in the midst of preparing something more detailed. However, our initial review of fewer than 20,000 policies leaving, the results are very similar to other policies that leave to join the voluntary market. As you'd expect, newer homes further from the coast tend to be able to find coverage elsewhere more easily and reasonable. Jerry Fadden will be sending out more details later with some specifics on the items that Mr. Garrick had asked for. So unless there's any questions about depopulation, that concludes depopulation.
Thank you, Denise. Not hearing any questions, we'll move on to communications with Jennifer.
Thank you, Madam Chair. Since the middle of March, state government as well as other association stakeholders have largely focused on the pandemic situation, as you can imagine. This has required us to adapt many of our normal outreach activities in the past quarter. COVID-19 has also created a need for increased stakeholder communications, both internal and external, to ensure association employees have the information they need to work safely and effectively from home while continuing to provide quality service to our policyholders and their agents, as well as ensuring that key external stakeholders of the association are aware of the measures we're taking to respond to and remain operational in response to the pandemic situation. So much of our work in March focused on keeping legislators, agents, and other external stakeholders informed about the response, including how the association is transitioning to remote operations, our temporary suspension of postal outreach, and the temporary payment leniency available for policyholders financially impacted by COVID-19 that Denise talked about earlier. For our normal legislative and regulatory affairs engagement activities during the first quarter, you can find a list of those meetings staff attended in the PDF of the materials. As you would imagine, members of the legislature and their staff are focused primarily on issues related to the coronavirus. We did have some productive meetings in January and February, but by the middle of March, they had turned their attention to health and safety issues associated with COVID-19, and rightfully so. So those early 2020 meetings were primarily to follow up on the December board meeting and either answer questions about action taken or anything mentioned in public comment, or to fill in staff or members who were not able to catch the meeting in December. One meeting of note in February, we met with Senator Taylor's office following the board meeting materials briefing. And the office was inquiring about the conflicts of interest provisions in the Sunset Bill. And his office echoed concerns that were voiced by some members of the Sunset Commission regarding Guy Carpenter running the catastrophe models for us, as well as placing our reinsurance. They feel this is a conflict of interest and had requested language in Sunset be added to address this. And the Sunset Commission, when they had their hearings, had requested information about our reinsurance, but ultimately decided not to address it within the Sunset Bill. And so I think it's reasonable to expect that we could potentially see legislation next session addressing this issue. We also met with the Office of Public Insurance Counsel. They had requested the opportunity to review the changes we've been making to our policy forms and notices as required by legislation passed this last year. We met with their team in early March and had a productive conversation about those changes and how we are communicating them to our policyholders. At that meeting, we also discussed the rate setting process that TWIA went through last year, and OPIC expressed some concerns about our rate adequacy analysis that were laid out in their letters to us. And it seems to be based on more general concerns about the use of hurricane modeling and evaluating rates, and not something specific to our analysis. They also expressed concern about our level of debt, specifically the Series 2014 bonds, and we were able to brief them on our implementation of your directive at February's meeting that we pay $45 million toward a partial redemption of those bonds, which they were pleased to hear. We have now been able to re-engage a little bit in the past couple of weeks with some legislative offices, but just like us, staffers are working from their homes instead of the Capitol complex. We know they're heavily involved with webinars and other remote meetings with other agencies. So we are maintaining contact, but we are keeping a light touch for now. We certainly don't want to get in the way of the legislative offices dealing with health and safety matters during the pandemic. Last month, we did meet with staff for Chairman Lucio, the current chairman of the House Insurance Committee. And that conversation mainly focused on the legislative oversight boards. Appointments to both of those boards have now been made by the Speaker and the Lieutenant Governor, so we have a complete picture of who we will be working with there. And the names of the appointees are also listed in your briefing memo. They're almost all coastal legislators. One of the exceptions is Senator Kelly Hancock, who is the chairman of the Senate Business and Commerce Committee. And by statute, that chairman is designated as the co-chair of both legislative oversight boards. At this time, the board had not taken steps towards holding hearings or requesting any information from us. What we've learned is that there's not really a timetable at this point that we're aware of, but like I said, we're keeping in touch with folks at the legislative offices, and we'll keep the board informed just as soon as we do have a timetable for when we might expect those hearings to be held. So we're on standby at this point, but internally we're working to prepare for those oversight hearings so that we have materials ready whenever they do happen. And the work that we're doing in preparation for the legislative oversight boards does tie in very closely with the work on the biennial report to the legislature. And I believe you'll be getting an update from Mr. Garrick about the meeting of the Legislative and External Affairs Committee that was held last week to kick that off. So we're just pleased that we're able to get kind of a head start on that this year. That will help towards the end of the year as we get that report ready. As far as the legislative implementation program, we continue to work closely with the rest of the organization in shepherding the legislative implementation program to a successful conclusion. You've heard from other members of the executive leadership team on some of those specifics. And in your materials, you can also find an updated exhibit on our progress in implementing each of the provisions of Senate Bill 615 as well as House Bill 1900. We did spend some time this quarter working with TWIA on some additional policy form changes for conspicuous notice about our supplemental payments policy. So this instructs policyholders what the supplemental payment policy is and what the deadlines associated with those are. Those changes were approved by TDI and implemented in our systems in April so that they will go out in policies effective July 1st of this year. Two other issues that are important that we're working with TDI regarding are the transfer of the WPIHC program that Denise mentioned, and also finalizing our modifications to the assumption depopulation program, which will eliminate major program milestones during the storm season. And then finally, looking towards the end of the year, implementing installment payments and credit card payments by our January 1st deadline will be one of our last critical milestones of the legislative implementation program as we head into next year's legislative session. And then the Agent Advisory Group held a virtual meeting on April 14th. In addition to some routine updates, we requested feedback at this quarter's meeting on the temporary payment option that we created for COVID-19 that Denise mentioned. We did introduce to them the approved mailing methods that Denise spoke about earlier, and you gave us direction regarding. And then the initial implementation of the installment payments later this year. So we did go over what we are proposing those changes might look like and got their initial feedback on that as well. And then we also provided some input on the new renewal process and how that is shaping up. In terms of media coverage, we returned to a more traditional tempo and tone in the first quarter. As you recall, we had a lot of coverage at the end of last year over rates, and a lot of it was not friendly. January and February are usually pretty quiet for us. And in March, everything was dominated by coronavirus. So media coverage for TWIA was at about 80% neutral or positive in tone. We did some media outreach on the actuarial and underwriting committee meeting on the RFP process, and that received coverage in the insurance trade press. And then we also did some outreach on the new policy renewal process, which received a small amount of coverage in the coastal press. And I'm happy to answer any questions on the variety of topics I just covered. Otherwise, that'll conclude the communications update today.
Thank you, Jennifer. This is Chandra. My only question is, I'm sure you're working on a plan going forward to kind of change how we do outreach, especially moving into hurricane season. So can you talk a little bit about maybe what y'all are doing differently this year versus prior years and anything we can do to support those efforts?
I'm sorry, Chandra, that came through. The audio was a little wonky there. Can you repeat your question? I'm so sorry.
Sure, that's okay. I was just asking, we're moving into storm season, so are there any outreach efforts that we're making that are different than in prior years due to this pandemic? Or, how can we support any efforts y'all are making to change your outreach to policyholders or to the media?
I'm sorry, that is just not coming through on my end. Did anyone else able to hear Chandra clearly?
Jennifer, can you hear me? I think she wants to know if we're making any changes in public outreach as a result of COVID-19 as we enter hurricane season.
I don't know why the audio has suddenly become so garbled. I think what I was able to pick up was out. Okay, Anna is sending me a chat. Thank you. Outreach for hurricane season and our changes to cope. Yes, we are doing some changes. We're kind of looking at what's possible because obviously some of our normal outreach for hurricane season involves meetings on the coast. So we will be looking at where we can have those virtually. We know some of the entities that we normally partner with, they have already started making changes because of the COVID-19 environment. So we will leverage those relationships where possible. But yes, we will be leveraging our online and digital components of our program this summer because of the COVID-19 environment.
Thank you so much, Jennifer. I knew you would have already pivoted and adapted to that, but I just wanted to double check that.
Madam Chair, this is Mike Garrett. Could I ask one question, please?
Yes, sir.
For Dave Williams. Dave, going into hurricane season, and I'm sure independent adjusting firms have already made some adaptation to COVID-19 and dealing with policyholders. But I guess if we had a big event, we'd probably be using some firms that we normally don't use. Is there going to be protocol that has to be followed by those independents in dealing with our policyholders?
Yeah, so we're already anticipating how different things will be if we have storms and we're still under COVID-19 conditions. We've already put out safety guidelines to all our field adjusting firms for how to interact with policyholders, especially when there's interior damage. So they all have to wear masks, gloves, and get permission from the policyholder, even enter the structure, or where the policyholder is not comfortable with that, we've purchased technology so we can do collaborative, interactive video from the desktop level in order to accomplish the internal inspections. As far as if we have hurricanes, we've put together a task force in claims to do a gap analysis looking at three things. One is, how will we set up mobile claim centers on the coast if we have a large storm under these conditions? And we're looking at how we can send as few employees as possible to the coast while still be able to serve all the policyholders there. And one of the solutions we're looking at is setting up a large air-conditioned tent with kiosks separated with the proper distance and little if no interaction with policyholders, where they simply walk up to a computer tablet, press enter, and they're on a video conference with a claims resource to accomplish whatever they need to accomplish, whether it's reporting a claim or get advanced payments made. The other thing we're looking at is, how are we going to manage hundreds of desk examiners now working remotely from their homes instead of in centralized office locations? So because our systems have been upgraded and we have new processes in place, we think that won't be as big a problem. We have audit logs, we manage phone calls, we listen in on phone calls, live phone calls and recordings, and manage their quality so we can tell how these resources are interacting with policyholders when we can't look over their shoulder. And then lastly, we're working with Jennifer Armstrong's team to figure out today and for the next 30 to 60 days what communication we need to get out to our policyholders and agents so they understand how conditions might be different. So think about how people will evacuate if everybody's under COVID-19 and shelter-in-place orders. Where are they going to go? Are the shelters going to be open? Can the shelters take everybody if the local shelters? If not, they have to evacuate away from their area. Will there be hotels and motels available? And we want to encourage people to have a plan now, not wait until the storm's about to hit, because the resources to evacuate and stay away may not be the same as were available for other storms. And then, of course, we also want them to understand how they can interact with us digitally so they don't have to risk having in-person relations with our resources. So we're definitely taking a look at this. We're doing a gap analysis on our CAP plan, and we'll update the plan accordingly as we find gaps that need to be filled.
Thank you, Dave. Does anyone else have any additional questions?
Yeah, Dave, this is Corey's. I might have heard this, but I just wanted to make sure. When right now a policyholder files a claim now or during hurricane season, regardless if we're in COVID, are y'all sending them something right away as soon as that claim is open that kind of, explains the process under COVID-19? Are they getting some kind of immediate communication to help them understand how it might be different even today if y'all have had any claims?
Yeah, so our field adjuster and our desk examiner make contact with the policyholder and explain what to expect. Fortunately, under normal conditions this time of year, there's not a lot of interior damage. So we don't have a lot of these issues right now. And even though we do have the ability to interact with them digitally through video, what we found is only a handful of policyholders have chosen to do it that way. Most are still letting our adjusters in because the damage isn't extensive. They don't have to spend a lot of time. They take a couple pictures, measurements, and they're out of there in 5 to 10 minutes. That will change dramatically for hurricane conditions, because not only would we have to send an adjuster, we might have to send experts in, and certainly policyholders will need their own people to come in. So we're still working out the kinks and how that's going to look, but even contractors are using interactive video with insurance companies, including us, where the policyholder maybe doesn't have to take that risk.
Well, and it's
Hopefully
not.
that answers your question.
It does, but it's not just the policyholder's risk, it's the claims adjuster's risk as well, right? Because they're entering the home also. So, it's being concerned for both points of view, right? Protecting our policyholder.
Yeah, and we've got those instructions, those guidelines are already in place. So, in fact, maybe Amy or Jennifer can send you a copy of those guidelines because they're readily available. Certainly the board can see them.
Thank you, Dave. Does anyone else have any other questions for staff before we move on? Okay, so we're at section 12, which is the section designated for closed session. Do we have any items that need to be addressed in closed session today? I've not been made aware of any.
We do not this is David Durden. We do not from the legal side. I don't believe we do have anything.
Do any of the board members feel like we have a need for anything to be handled in closed session? Okay, hearing none, we will move beyond that section and move on to section 13. Well, no, there's nothing deliberated, so we're going to skip that section as well. The next thing is committees. We've already heard from the actuarial underwriting committee, so we have those them ready to take action to make their next meeting. If we could get a report from Mr. Garrick regarding the LEA committee meeting that was held last week.
Sure, Madam Chair. The Legislative and External Affairs Committee met on May 7th via conference call, and we discussed, first of all, several items that the staff had brought to the committee just for consideration. They were kind of broken out in what I would call 3 areas. One would be insurance coverage, another would be funding and rates, and another would be miscellaneous. We went through all those items as part of the call, had a lot of questions, a lot of feedback. Just to remind the board that the committee members are myself, Georgia Nesbitt, and Tony Schrader. As a result, we've asked for some feedback on several of these items, and we intend to meet again in about 30 days. We're in the process of scheduling that, hopefully to have a full report to the board in August. Also, as part of this, we are obviously reaching out to a lot of the stakeholders, legislature, to see if they have anything they want this committee to consider as part of the process in looking at changes for TWIA for the upcoming legislative session. So, Madam Chair, I would defer to my colleagues that are on the committee with me if they have any more input. If not, that would conclude the report of the Legislative and External Affairs Committee.
I think you covered it very well, Mike.
Thank you.
Thank you, Mike. It was a good conversation. I think we have a good start on the recommendations. So we're moving to the last items on the agenda. I had asked Mr. Pollock to add a section for kind of new business, additional items that we would like to consider for future meetings. It's something we really haven't had before. We kind of interject as things come up, but I felt like if there are things that the board feels like we need to address that are really not handled in any of the prior sections, this will give them an opportunity to bring those items up. So is there anything that anyone has that we haven't addressed yet that they would like to see or have more information on for future meetings? There's one thing I think John wanted to mention. Is that correct, sir?
I guess one thing that I would add, Madam Chair, as part of our committee, and not sure if it will be on the August, is possibly having someone come visit with us about fortified roofs. And, I guess that would be considered new business. I'm not sure, but maybe.
Yes, sir. That's what we had talked about. I actually have reached out to the people that can do that presentation, and they're willing to come do that. So I will confirm those dates and get that to Amy, that contact information, so we can make sure that makes the agenda. But yes, that's something that we wanted to discuss, because the fortified roofs are definitely something that can reduce our risk, and is something that we may want to consider as part of our additional payout, so that we can help supplement reducing that risk. So that would be really beneficial. Any other business that we would like to discuss?
I touched on it during the audit, but the defined benefit plan is something we probably need a briefing on.
Yes, ma'am. We will make sure that makes it as well.
Yeah, this is Corey. So I would add to that it's probably not just the defined benefit plan, though we can start with that, but it might be appropriate to look at the overall benefit plan for medical benefits and all of the benefit structure for the staff at TWIA.
That's a good suggestion, Corey.
It's great. I had a question, and maybe this is something that could also be presented to us. I know that with so many people working from home, it may kind of change the structure of how we hire people, what hardware we provide to them, what infrastructure we provide for them to be able to work directly. So I'd kind of like to see what that cost comparison looks like for an in-office employee versus the same out-of-office employee, to see if we're going to have some cost savings by allowing the employees to continue to work remotely after the COVID has subsided somewhat, and possibly people are coming back to the office, because it may be that there's a cost benefit savings to continuing to allow people to work out of the office if the work is still getting done. And it may be something that the organization can reduce the footprint of the buildings, facilities, and things like that. That could be an additional cost saving. So that may be something that we need to consider moving into this new climate. Anything else? Well, we have a couple of future meeting dates scheduled. They're still scheduled currently to be in person. The next one is August 4th, 2020 at the Tremont House in Galveston. And the one beyond that is December 8th, 2020 at the Omni Hotel in Corpus Christi. I'd like to thank staff tremendously for their planning and testing of this webinar format to facilitate this meeting. It's been remarkably smooth considering everyone's in remote locations, weather issues, etc. So I appreciate their efforts in doing that. Also like to thank everyone for their attendance. So with that, do I have a motion to adjourn?
Real quick, this is Corey. So I'm sorry, when you were talking about, looking at, the footprint, and then we brought up looking at the benefit program, including defined benefits. I'm wondering, and I don't know if this is possible, but if it would be appropriate to set up, this kind of sounds like strategic kind of changes. I'm wondering if it would be worth a committee to kind of run that, maybe like a strategic direction committee or something like that, that could work with staff to kind of pull that research and information together. Just a thought.
Okay. Is that a committee? Mr. Garrick, you may have to jump in and tell me, is that a committee that we have the authority to form? I'm not Mr. Garrick, I'm sorry, Mr. Perkins.
Yes, ma'am. We have standing committee, of course, is the executive committee, and that's the officers. And of course, you could assign a project like this to that committee. At this time, we really only have two other active committees, actuarial and underwriting, and legislative and external affairs. So I suppose logically, unless you wanted to create a new committee, which you as chair have authority to do, your action would be to undertake to have the executive committee, which is composed of the current officers of the association, which I believe are you, Ms. Morrison, and Ms. Neblett. You could assign that task to that group without forming a new committee, but otherwise you might need to form a new committee in order to do that, which you have the authority to do.
I think since this is a short-term issue, I think it probably makes sense to leave it under the executive committee. I'm fine with that. And of course, anyone else that would like to, gain input are certainly welcome to do so from the board.
Because it's kind of an in-depth, a lot of material to cover, it might be that the committee could refine the materials, and then the board could have a workshop meeting on it, which would be separate from the regularly scheduled meeting. But at a workshop meeting, I don't believe take any action. You just get all the material, and then any action could be taken at a future board meeting.
Right. It would take probably quite a bit to run through everything, because there's probably a lot of logistical considerations.
I think that sounds reasonable to me. The reason I was thinking about a committee, just because it does take quite a bit. I know those are some pretty hefty topics, right, to pull together. And maybe if we had, I think it's a great idea for the executive committee to look at that and help formulate that to then bring to the board in a workshop if that's allowed.
Sounds good. I think what I'd like to see is maybe like an outline of things to consider from staff, and let us review that before they spend a lot of time diving in depth into the details of that, to make sure that there's nothing else we want them to consider before we fully have them explore that and present us with all the in-depth information, because it's going to take quite a bit of research and everything to make sure we get a complete picture. Okay, so anyone else have anything else to add before we adjourn? Well, I appreciate everyone today. I mean, I already did my little thank you speech, but I do appreciate everyone today, and it's been a little bit more difficult to pick up on cues on when people wanted to talk. So I appreciate everybody just jumping in when they needed to say something. But I think overall it's been a really successful meeting, and I appreciate we handled the business we needed to handle so effectively. So do I have a motion to adjourn?
So moved.
Second.
Thank you. All in favor?
Aye.
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 Meeting is adjourned. Thank you, everyone.
Thank you.
Thank you.
Thank you.